Hey friends, the DeFi Doctor here. I'm the head of education at Decentralized Masters, the home of expert crypto education. Now in this video, I'm going to show you exactly how wars and military conflicts affect the crypto markets. More importantly, I'll walk you through the historical data, how Bitcoin has reacted during times of global conflict, and what smart investors are doing today to protect and grow their portfolios during geopolitical tension and uncertainty. We'll look at past wars, macroeconomic shifts, and why crypto is no longer just a side bet, but a growing hedge in times of global instability. I'll also share some of my personal insights from my own experience watching the markets during global crises like the Russian-Ukrainian war, US tensions in the Middle East, and beyond. If you've ever wondered whether war makes Bitcoin go up or down, or if DeFi becomes more or less important during a global crisis, this video is for you. Let's dive in. Let's start with the simple truth. Traditional markets hate uncertainty. War creates chaos in supply chains, disrupts trade routes, inflates commodity prices, and throws monetary policies off balance. Stock markets tend to dip initially, sometimes very sharply, as investors pull out of equities and rush into perceived safe havens like gold and US treasuries. Bitcoin and crypto were once thought to be part of the same high-risk asset class as tech stocks. And for a long time, they followed that pattern perfectly. Whenever a war broke out or tensions rose, Bitcoin would dip right alongside equities. But that pattern has been shifting. Slowly but surely, crypto has begun carving out a different response to geopolitical crises. Let's talk specifics. When Russia invaded Ukraine in early 2022, Bitcoin dropped in the immediate aftermath of that invasion, falling from around 40K to the mid 30K range. But just days later, something interesting happened. As sanctions piled up and the Russian ruble collapsed, Bitcoin rebounded hard. Why? Because it became a tool for financial survival. Ukrainians fleeing the country were able to carry their wealth via a 12-word seed phrase. Russian citizens turned to stablecoins and Bitcoin to protect their purchasing power. Crypto became the escape hatch from falling fiat. This wasn't theoretical, it was real, it was fast, and it showcased to the world exactly what decentralized money could do when banks shut down and borders closed. Historically, this has been the pattern. In the moments of shock, Bitcoin tends to dip with everything else. But in the days or weeks after, once the dust begins to settle, the narrative around self-custody, permissionless access, and hedges against sovereign risk start to drive renewed interest. While Bitcoin may grab the headlines, stablecoins are often the real MVPs during wartime. When traditional banking becomes unreliable or collapses altogether, people need a medium of exchange that doesn't fluctuate violently. Enter USDT and USDC. In conflict zones like Venezuela, Lebanon, Ukraine, and even parts of sub-Saharan Africa, stablecoins are used daily to buy groceries, pay rent, and move money across borders. During the Ukraine conflict, USDT volumes at local exchanges surged. Peer-to-peer activity spiked. And even NGOs began accepting donations in stablecoins to deliver aid faster. So while Bitcoin serves as a long-term hedge and a portable store of value, stablecoins are the practical engine for daily survival in conflict-stricken times. If you're tracking how wars affect crypto, you cannot ignore the stablecoin layer. DeFi protocols don't shut down during wars. That's the beauty of it. Smart contracts don't care about borders. They don't pause operations because of sanctions. They don't follow orders from central banks or governments. And during times of uncertainty, this trustless infrastructure becomes incredibly valuable. But here's the catch. Usage only increases if the internet stays online and users understand how to access wallets and navigate these types of platforms. In areas where the infrastructure remains functional, DeFi usage rises. In areas where the internet is cut or heavily censored, adoption suffers. From a personal standpoint, I've seen DeFi activity spike in times of sanctions. Think of protocols like Aave, Uniswap, or Curve becoming liquidity hubs for citizens trying to exit local currency exposure. It's not always massive in scale, but the direction is clear. In war, DeFi matters more. Now, zooming out, we've seen a trend forming since 2013. Every time there's a global conflict or a monetary crisis, Bitcoin adoption rises. After Cyprus froze bank accounts in 2013, Bitcoin pumped. After India demonetized high-value currency notes in 2016, local BTC volumes shot up. After COVID lockdowns and the US printing trillions, Bitcoin had its biggest bull run ever. War, in a strange way, reinforces the crypto thesis. Not because war is good, but because it exposes the flaws in centralized systems. Banks freeze, currencies fail, trust erodes, and crypto by its very nature offers an alternative. Investors are starting to notice. You're seeing more institutions quietly diversify into BTC as a non-sovereign hedge. You're seeing DeFi platforms with war-resilient narratives gaining attention. And you're seeing governments rush to regulate stablecoins because they realize these digital dollars are outpacing their own currencies. We, my friends, are now entering a multipolar world. One where US dominance is challenged, where fiat currency battles are fought silently alongside real-world wars, and where digital infrastructure becomes a frontline defense. In that world, crypto's role will only grow. I believe Bitcoin will become more important during geopolitical fragmentation. I believe stablecoins will replace dollar bills in conflict zones. And I believe DeFi will become the new financial layer for those who cannot rely on their local banks. This is not speculation. This is already happening. You just have to zoom in on the right places. Personally, I'm positioning for this. I'm holding BTC for the long haul, but I'm also allocating to stablecoin yield protocols that don't rely on centralized players. I'm diversifying chains in case of regional internet bans, and I'm teaching others how to secure their assets without relying on exchanges or governments. If you're watching this and wondering what should you do, here's the takeaway. Wars create chaos, but chaos creates opportunity. Crypto is no longer just a bet on tech. It's a defense against systems that break. And if you want to be part of that future, you need to start learning how to operate in this space now, not later. So, how do wars affect crypto markets? In the short term, there's volatility. In the long term, there's validation. Bitcoin reacts like any risky asset in a moment of crisis, but it transforms into a lifeline shortly after. Stablecoins become lifeblood. DeFi becomes the new infrastructure, and the entire ecosystem grows stronger through every stress test. Thanks for tuning in. If you found this breakdown helpful, subscribe and hit that like button. Stay sharp, my friends, stay decentralized, and I'll see you in the next one.